Hey guys, welcome back. Patrick here. Did you guys miss me a little bit? I've been working on a few projects, but now I'm back. So I got a new camera, which I couldn't set up for this video because, of course, the cable is sold separately and I didn't know that. But when I get that sorted out, hopefully the video quality should be much improved. And I want to make a lot of content in the next year. So I want to make more videos on YouTube, but also I would like to maybe do some live streams. I don't know if you guys are into that, but I can do Q&As and answer some questions, strategies. We can do research on SPACs and stocks, all sorts of good content. So if you guys are into that, look forward to that in the near future. But for today, we have to talk about SOFI. And SOFI, just like the rest of the SPACs, is not doing well. And I'm not going to lie, I mean, I am really annoyed with that because SoFi is a company that I like. I started using the product, and the meme, I like the stock. Well, I do like the stock. I like the company. I started using it. I feel like it's going to do really well in the future. But short term, we're in trouble again, like for no reason. So when you look at the surface, I mean, everything seems like it's going great with this company. The share price finally stabilized around $17, and they announce great things all the time, right? So recently they announced that we were going to be able to join IPOs before they launch onto the open market, meaning you can invest in them like an institutional investor. That is great, right? They recently announced also that we were going to be able to have access to auto loans in partnership with another company that they're going to partner with. Then, of course, they got a lot of users from Robinhood when the platform had all of the drama around it. So there's all these positive news surrounding SoFi, but then when you look under the surface, that's when you see warning signs, which no one seems to really be talking about. So that's what we'll investigate today. There's 30% short on this company, which is one of the highest in the market. So why is that? That's what we'll talk about. Alright guys, you made it past the intro. Now please like and subscribe. It really helps the channel out. Thank you. Alright, if we look at some of the short interest on companies that have been talked about negatively in the news recently, it's going to be very revealing on what might very well happen with IPOE pretty soon. So this is GoEV Canoe, right? This is a company that literally scrapped its entire business model from before the merger. So things that we liked about GoEV or Canoe were the skateboard and the engineering services. They had a partnership with Hyundai to build their platform in the future, and that's entirely scrapped. They replaced a lot of the management team, so now it's all new people that weren't part of the original vision. So you'd think, hey, the market's really going to punish this company, right? So yes, the share price dropped, but look at the short interest, 9.70%. So that's not that high. Well, what about, let's say, Lordstown, a company with fake orders, assumed, right, to be fake. So Lordstown is at 12.5%. So there's some people shorting this stock, but it's not overwhelming. Now, what about Nikola and their fake pickup? Nikola is still at 20% shorts, right? So yeah, the share price, of course, has dropped a lot also, but there's still a big short presence in this company. But now, if we look at IPOE, which is going to merge in and become SoFi in the future, that's when it makes no sense. 29.91%, and look at how short percent increase, 24% recently, right? So 3 shares out of 10 right now are being shorted for this company. So do they know something that we don't know? I mean, honestly, not a lot of people have been talking about the problems with IPOE. So if we look at the entire market, IPOE is one of the companies that is shorted the most right now, right? It's shorted the same amount as some pharmaceutical companies that are super speculative. I mean, that doesn't make a lot of sense, right? When you look at the chart for it, you can see that, look at how, yeah, like all the SPACs that had its peak and then start to go down, especially during the SPAC attack. But look at how over the past couple of weeks, it's really stabilized around $17. But there are 2 main problems with it right now. The first one, of course, is not typical for SoFi. It's all the SPACs. The valuation is going to be an issue. They're going to be attacking it on that. But then there's also, I don't want to call it a lawsuit because people are going to say, oh, it's clickbait. But they are involved in a legal dispute, which I believe is what the shorts are really going to be attacking the company over. Let's address the lawsuit first, because this is what the shorts are going to use to scare off the small retail investors and try to make the share price collapse, which I don't know if it's going to collapse because the company has a lot going for it, but it probably is not going to help in the short term. So you can find all this information in the latest proxy statement by SOFI. Before the merger, they have to file these, and they're going to give all the materially relevant information about the company, including the legal proceedings. So you can find this in the latest proxy statement at page 219. I strongly encourage you guys to go read it. And before I do give you the context and read parts of it, remember, I am not a securities attorney. I'm not a licensed financial advisor. So all of these videos are for fun and entertainment, and I'm giving you my opinion as a small retail investor, but I'm not construing this to be legal advice or financial advice, right? So consult your own professionals. So let me give you context. This was recently added, this entire paragraph, to the latest proxy statement. So on March 22nd, 2021, SOFI was named as a newly added defendant in an amended and supplemental consolidated stockholder derivative complaint in New York. So the judge allowed this, right? They were added as a party to this complaint, and the judge signed off on that. So the plaintiffs, Henren Silk Road Investments, Oasis Investments, and Jody Arama, alleged that the chairman and chief executive officer of Renren, Joseph Chen, and others breached their fiduciary duties to Renren's shareholders in connection with a transaction in which Renren spun off its holdings of SOFI Securities, as well as other stocks, to Hope Pacific Investments, an entity allegedly controlled by Mr. Chen. All right, so basically, Renren is at the center of this dispute. The CEO of Renren, Joseph Chen, allegedly took the shares that the company owned and then he sold them too cheaply, right? He gave himself a sweetheart deal to another company that he controlled. So let's say that the shares were worth $10 each. He sold them to the other company for $5 each, and he pocketed the difference. So they are claiming that this is fraudulent, right? It was not an arm's length transaction. It was not an honest business transaction. The guy took advantage of his position as CEO of Renren to make money, basically. That's what they're saying. So I'm going to skip some of it, but basically what they want to do is unwind the transaction. Right? So the amended complaint seeks, among other things, an order to impose a constructive trust over the SOFI shares transferred from Renren or the proceeds thereof, voiding and setting aside the call option transfer of approximately 17 million SOFI shares as a fraudulent conveyance and requiring the company to pay over the value of the call option transfer. The company intends to vigorously defend against the action and believes that any claims against it are meritless. So what they want is for the courts to unwind this transaction, say that it should never have happened, right? These 17 million shares should still be with Renren, and unwind the transaction means 17 million shares would go back to this company. Or they want the cash from this transaction, right? So these are the two likeliest outcomes of this lawsuit, assuming that, you know, it's a legit case. I don't know the details. I don't know if Joseph Chen has a really good reason why he sold these shares. SOFI is going to defend itself. It's going to claim that this is not a legit complaint, right? But so far, the judge allowed them to be part of the complaint. So if it's unwound, well, the company would have to give up 17 million shares. They would be put in a trust, and Renren would collect those shares. Or the company might have to settle out of court and pay hundreds of millions of dollars or over $1 billion. I'm not sure exactly what the number is to these other parties to settle the lawsuit. So these are going to be negative, and they're not going to be a positive PR move for the company, right? It's nothing that they did, right? They got these shares. They didn't do anything wrong with it, but they're kind of involved, no matter what. So I do think that this is what the shorts are going to be abusing, right? When the small retail investor sees this, it doesn't sound good. So it's very likely that they're going to try to attack the share price that way. So when they do their short report and they talk about all of these shares that are going to be lost and all of that, it's going to scare off a lot of people. And right now, even myself, I'm second guessing it. I think that the company is going to do great long term, but in the short term, I think it's going to hurt them. So regardless of the final outcome, defending lawsuits, claims, government investigations, and proceedings in which we are involved in is costly and can impose a significant burden on management and employees, and there can be no assurance that favorable final outcomes will be obtained. So the company is aware that, this is going to put a strain on the company no matter what, because they're going to have to defend this lawsuit, and it kind of takes focus away from growing the business. Now, if you look at RenRen itself, this has been kind of like what these third parties have been doing is, since they know that RenRen has a claim to those shares, they start to invest in RenRen. And look at when the SOFI merger was announced on January 7th. Look at the shares of RenRen since then. They went from, what is it, like about $5 to $8.79, right? So the company gained, what, 50% since then? And now it's going down a little bit, but this is what they're trying to do, is they're buying into RenRen. They're building their position in that company, trying to get the SOFI shares. Then there's the company's valuation and projections, which they're going to attack. So right now, as of me filming this, the share price is at 17.3, and that gives the company a valuation of $13 billion. And let's be real, 13 billions is a lot. We are paying extra. We're paying a premium for this company because we think it's going to have exponential growth over the next several years. But we don't know if that's going to happen or not, right? And they were underwritten at a 13x multiplier on their 2025 net income of $635 million. But with the current share price and valuation, that gives the company a 20.4x multiplier on those revenues. And that is fairly high, even for a growth stock. So you know what they're going to do, right? When you combine that with a lawsuit, that gives them a lot of ammunition to go on TV, publish their short reports, and say, hey, the company's overvalued, they're misleading the investors, it's not going to grow that quickly, this and that reason. You guys know their short tricks. And that might really hurt the stock in the short term. They're going to wait at the worst possible time, like right after the merger, let's say, when people are selling and trying to take profit out or whatever reason. They're going to wait at the worst possible time, and then they're going to launch a report. They're going to go on TV. They're going to say that they talked to ex-employees that said that the projections are too high. You guys know what they're going to be doing. And that's what I think is going to happen. 30% short interest is fairly high. We've seen earlier that it's one of the highest shorted company in the stock market. They have a very big incentive for the share price to go down, and these guys have a lot more firepower than we do as retail investors. So if we look at the chart, right, it had stabilized around 17. It was going pretty well, right? And today, at the end of the day, while it was filming, there was a nice little spike in price on more volume. Now, I don't know if this is shorts covering, people opening their position. I really cannot know that. And I don't know what's going to happen in the future, right? I'm just doing projections like you guys are. What I think is going to happen is that they are probably going to be able to make the share price go down. Where? I'm not sure. $15, $14. You guys know what's going to happen is that they'll make the share price go down. Then they'll actually buy shares, and then they'll ride the company up when it goes to 25 plus, because we all think that the company is going to do well in the future. So how do you actually handle this? Well, I really debated this one, I'll be honest with you guys, because it's a tough situation, right? I think that in the short term, the share price is going to go down because of all these negative factors, but in the long term, I really like this company. I want it to be one of my core positions. So what I did is I actually trimmed my position a little bit, right? I just want to step away from the train tracks. I'll let the train come, and then after that, I'll buy more shares. So that's what I started to do with a lot of the SPACs, which we've known that, even up to the merger, there's a lot of drama surrounding it. I mean, especially right now, there's not a lot of traction before the merger. We can't really expect that big ramp up to the merger that used to give us a lot of profits. So since that's not really in play anymore, there's no real incentive to open a big position before the merger. So what I'm going to do is I trim my position a little bit, but I want to keep some in case it keeps going up, right? There might be a short squeeze. So what I'm going to do is after, they do their thing and the share price goes down to, let's say, 15 or something like that after the merger, then I'm going to buy more shares because I want to hold this long term. So I debated, should I sell covered calls in the money? Should I buy puts? So I did buy some very cheap puts at $12.50 just in case, like just cover my bases. And then also I sold some of my position as I was talking about. So right now I have a long position and I have a short position to cover it, just to summarize. So guys, let me know in the comments what you do. Are you worried about this lawsuit at all? Like, do you agree with me that they'll probably be able to lower the share price a little bit? I mean, 30% short interest is fairly high. So let me know what you guys think, and I'll see you guys in the next video.